Hey guys, Mike here. So it looks like we finally got our relief bounce we've been talking about, and understand I'm not going to hold back on this channel, and I'm going to show you exactly why we bounced today. It wasn't just oversold territories, but three things happened that caused it. And so I'll show you that again. We're going to tell the truth in this channel. We're not going to sit here and sugarcoat anything of what happened. Now, whether or not that continues into tomorrow, since this will be the end of September Opex, the end of September, and will the people in charge allow us to go under 10% for the year on the S&P and throw out all that great data we just talked about yesterday? Or will they keep us above the 10%, above that trend line that we so talked about? It's probably the most famous trend line right now, talked about this week. We'll see. So we'll get into all that right there. And, now look, I always keep you updated because I feel like it's what we need to do, right? And when it comes to any kind of economic news, because it all appears to be hot garbage at this point in time, but you can see the Kansas City Fed Manufacturing Index down -8 versus -2 estimated, 0 prior month. New orders, shipments, and productions all stink. Employment improved marginally. Prices paid ease, so that is a good thing. And you can see our housing market, which, oh boy, I show this chart now just kind of get a chuckle of it because I want to see how low it can actually go. But these are U.S. pending home sales. That is definitely a new low now. And if you look down there, U.S. pending home sales index month over month, doesn't look very hot, does it? Yeah, I don't think anybody's really buying anything. And that's what these high rates will do to you. And of course, I mentioned to you yesterday that a lot of people are covering their shorts, at least people I like to follow and stuff, right? Who tend to be, at least they're batting between 50 and 75% on a lot of calls, which is tough in this market. And they're kind of open and honest with it. So, I'll bring those people to you when I can and stuff. So, our friend Dan Niles is one of those ones covering his shorts. But this is what he is looking out for, right? This is like the number one on his list right now.
Dan, hey, so covering your shorts doesn't necessarily mean you're going long. So what is it exactly that you expect here? And is this sort of like an all clear for the rest of the year?
I don't think so, John. And just to be clear, we're having to look at this day by day because I think I said this in a prior interview that I had. The number one thing I'm watching when I wake up every morning is what is oil doing? Because apart from everything on your screen, that's the one thing you should be watching because the market right now is being driven by oil, how it's affecting inflation because it feeds into everything else. And then ultimately, what does that mean for the Fed, which has been driving the market for, you could argue the last 15 years and certainly for the last couple. So that's, why I think you have to manage this day by day, which is what we're doing, and see where that takes you. But that's also why, I said in an interview early August that I thought a 10% correction in the S&P, wouldn't surprise me before year end. And so we're sort of along the way to that.
So overall, the S&P has done a lot better so far in 2023 than you expected. From what I recall talking to you toward the beginning of the year, you're watching oil. Are you also watching bond yields, or do those not matter?
Well, you're 100% right, John. It's oil. Then how does that affect bond yields? And then how does that affect inflation, which ultimately impacts the Fed? So that's along the food chain, but I think it starts with oil.
And we've talked about this. I told you how much oil affects everything, right? I think I talked about it in Saturday's video as well and showed it to you if you happen to watch that video. And you can see, obviously, why. Because we know what's going on with the supply, right? The Middle East and everything is trying to dampen it down. Russia's trying to dampen it down and decrease it so they can keep the prices high. And that's what you see happening right now. They're called cartels for a reason. And so, this is extremely important because, and guys, before we continue, please hit that like button. It helps people find the video. I really appreciate that. And if you like this kind of content, think about hitting that subscribe button down at the bottom. Because it's just like he said, and most of us said it a bunch here, it affects inflation. It kind of scares people. It scares the Fed, right? Because it increases inputs so much. And it's really a lot of things that are out of their control. Like they can't control what the cartels are going to do with the supply. They can't control if we're going to continue to sell down our oil to try to keep it suppressed. You just don't know, and you can't force companies to drill or produce any more than they want to, right? Because they're making a killing. And it is what it is. Like it's out of our hands. Now, understand, oil is one of those things today with two other things that did what? This is what this rally was about today. What happened? Bam, dollar, right out of the gates, shooting down. U.S. oil, bam, shooting down, right out of the gates. What happened to the U.S. 10-year? Boom, down, right out of the gates. And that's what's been scaring the brakes off the market here, right? All three go down. I don't care what's going on in the market. It's going up. All right, and that's why you saw I'm going 1.5%, I believe, on the Qs at some point in time today. But when you look at the 10-year, looking long term here, does it look overstretched? Good God, yes. You know, I mean, it's overbought and everything. And any little pullback, you've seen it. You go ahead and pull this chart up and look at any pullback and see what happens to stock. And that's why I'm saying I don't know if it'll continue tomorrow because I can't predict when these things are going to pull back. You know, you look at the dollar. What's it coming into? It's coming into, on the weekly chart here, this trend line. What's this trend line? Look at all the rejections going way on back here, all the way to 2011. Okay, it's coming up in that trend line. So if it does continue up, will it make it past that? That's a good question. That would be a true breakout for sure. And then you got, oh, another one coming into a trend line, goes back to 2015. I could probably drag it back farther. But again, many rejections. Okay, and so you got US oil coming to that. I didn't even look at the 10 years, see if it has one of these crazy trend lines. And they tend to work pretty well. So again, if you all of a sudden you have these coming up into resistance, the market likes to look forward, right, and go, ooh, we might be getting resistance. We might get a rollover on at least 2 of the 3, if not 3 of the 3, because a lot of people are predicting oil at 100, and that would be really bad, by the way, for consumers, us, and the economy. Now, what's another thing to start looking at here on the S&P? I told you this trend line right here. Everybody's looking at it. That's where we're holding right now. You can see we're oversold on the daily. That does not mean it cannot go down farther. It sure as heck can. But one thing to look at is we didn't reach the 50 Fibonacci level yet. If you look at the other pullbacks, you can see there's the other bounce right here. And when did it bounce? When it hit right at that 50 Fibonacci level, 0.50, if you like to call it that. We weren't quite oversold in the daily. You can see that October low is what? We were actually oversold. And that's what I mean, you can go down farther. See how we were oversold about 2 weeks before? Actually twice. And then it still went lower, but it did not go into oversold territory. So the question is, do we pop from here and carry on to the fourth quarter, or in September over 10%, we do a nice little pop up, and then we come back down to test that 50 Fibonacci level, and which would be also a great deal of support, and the 200 moving average is right there. So that'd be a lot of confluence, okay, happening. Now, Qs, obviously, some people calling this a bear flag. Call it that if you want. That's fine with me. Right now, it's still playing out, so we'll just keep track of that, all right? Again, you can see right there, there's the bounce. We know what the bounce was. It was being oversold, and shorts were covering, okay? It's another thing. That's what you saw in AMD, and I'll show you that stock because I sure couldn't find no news on it. Again, we talked about this bullish divergence on the RSI. On the shorter term time frame, that is playing out right now. IWM is another one. It gets oversold, you get the bounce. Doesn't mean it's going to go crazy or anything like that. Again, it got a gap right above. If it does get into that volume gap, it will move right through it. That's how IWM, we've seen it. That's how it moves, right? And so we're still going to have to see if on the bottom of the Qs and the SPY, is it going to continue to move towards that weekly fair value gap? Or is it going to start heading back up now that it's found liquidity down here? What to see. Tesla, again, we talked about this bullish divergence. Again, we got a pop. And I'm not going to keep talking about why the pop happened. Because you can see it wasn't huge or anything. But again, I just look at Tesla like this. We're still in this symmetrical triangle, still wedging. I mean, basically, we've been in that range of about, I guess, 6% for quite a while now. The good thing about Tesla here, as far as the company is concerned, no competition in the U.S., buddy. This came out yesterday. U.S. EV sales, and I mean, look at this. This is crazy to me. 325,000, right? You can add every one of these together, and you don't even come close to that. Every one of them. I mean, that is just a stunning piece of data, and so the good thing for them is they own it, right? They're growing in Europe, Australia, they're booming. China's the big question mark, of course, because you don't know what Chinese government's going to do. Now, AMD, as far as I can tell, please put in the comments if you found some news on this. I looked everywhere for this because it did a big 5% pop, right? And I was like, woof, wow, that's a big move. And you see that candle, right? And so it's a big impulsive candle. But what it do? Again, trend lines do work, believe it or not. It went right up there to that trend line on this descending wedge and got stopped, right? It got halted and it sold off for the rest of the day about 1 to 2%, but still up between 3 and 4%, right? So again, if you can find some news on that, let me know. If it continues up, obviously we're going back to 110 again. Now Google, and I tried to do this in the video for a reason. Obviously it took a pop like everything else. I told you to keep that. I was going to keep that trend line in place because it would be resistance, okay? What happened? It got up there and it just happened to coincide with a gap fill as well. And so we're going to take that away. But again, that trend line is resistance until proven otherwise. That's usually how it works. Support turns into resistance. I'm going to go ahead and, because this thing has left a graveyard of gaps behind, extend these out because we'll see. I mean, eventually these are definitely, no doubt in my mind, going to get filled, especially being so close. Now, when you look at this, again, it's in a volume gap. Can it keep moving up? Absolutely. If it makes it past that trend line, it can go to probably like 136-ish, somewhere in that realm. And then we go into Apple. This one I thought was going to completely fill this gap. It was bearish this morning. It was red, even though the market was looking good. It came down, almost filled the gap completely. I thought it was going to touch that 200 for sure. Again, you can see the 50 now crossing over the 100 right there. The chart looks terrible at this point in time. You can see, what are you getting here? Lower highs, right? Is it going to come up, pack up here and set another lower high? Because we got 2 lower lows. That's what you got to watch out for with Apple. Now, earnings. We got one. It's Carnival Cruise Lines, okay? So we'll see if we're still traveling. I want to hear what they got to say about the consumer, because this is, you would think, one of the industries that should go down first, because that'd be the one of the things we put on the back burner, right, of things to do. Now, looking at data, a boatload of data. We're going to have core PCE, price index month over month, year over year, PCE, price index month over month, year over year, more importantly, personal income month over month, and spending, which they expect to actually decrease, believe it or not, right? And so pay attention to that. You got Chicago PMI. This is after the bell, 15 minutes after the bell, so watch out for that. And then you can have Michigan consumer sentiment, expectations, all that stuff. Again, if the market's down, guess what that stuff's going to be? It's going to be down. It's no secret. I think it happens every single time, and the market has been down. Okay, I can always tell if the market's down normally if views are down on videos, because people get depressed, right? I somebody say in the comments, they don't want bad news. Well, unfortunately, there is a lot of bad news out there. Unfortunately, it is what it is. But when people's portfolios are going red, they ain't in the mood to hear anything about it. That's just the way it works. That's human nature. And so that consumer sentiment stuff, because it is a survey, I'm expecting to see more bearish stuff. People putting it out there. But the biggest stuff to pay attention to is the data coming out, and then at 9:45 Chicago PMI. So pay close attention to that. Again, it is the end of a quarterly Opex tomorrow. It's finally done and over with and in the books. And so usually seasonality-wise, in the first week, the 9 days, in October are iffy for sure. And so again, I just don't think they're going to let us finish below 10% down on the SPY. I don't believe they're going to do that. I mean, it's not a coincidence. You see on that chart I showed you yesterday, when it's over 10% in the first, going through September, we get a great fourth quarter. So, and because they need to be able to suck as much money in the market as they can. All right, that's how they get their bonuses. We got to keep putting money in so they can trade it and charge us all the fees and all that good stuff. Okay, and so that's what I like to keep in mind. So I'll bet on greed. I'm betting on greed, but could be wrong. Again, it's Friday, which is always interesting to say the least. And, I have you guys asking this question a lot, so I'll just show you, for those who ask me, well, what's in the membership? It's like, one, there's a Discord. The biggest one is, of course, you're going to end up getting your morning news briefs Monday through Friday, where I go into all kinds of stuff, not just the news. I give you what the option market is expecting for the weekly on the big mega cap stocks, and the daily for all the indexes, as well as the breadth of the market and stuff. And then, of course, my baby, which I love the most, are the members videos I put out on usually Tuesday, Thursday. And these are videos, one, they're not just for you, but they're for my son as well. And the reason why I put out stuff you can use for the rest of your life, because I'm trying to teach him, right? He's too young now, but he'll be able to read through this. And that's why I had this channel in the Discord nobody can see or access called Notes for Mason. And you'll see most of my videos are in there, but anytime I think of something throughout the day, like I did a video today for the members, and if this chart, I would have discovered this 6 months ago, nobody would have been going into TLT. Nobody would have been going into bonds, right? And so I'll be able to use that chart, because it works now, as long as I can, right? And I'll be able to show you, use this right here until it doesn't work. That's what you got to do with the chart. When you find something reacts off of, whether it's support line, moving averages, whatever it is, you use it until you can't anymore, okay? And so, again, that's the kind of stuff you'll see in the membership. Again, $7.99 a month. That's $7.99 a month. That's what we're doing. So anyway, you guys ask it, so I put that in there for you. Hope you guys have a good one, and I will see you tomorrow. And don't forget, if you have any questions or you want them in Saturday's video, start submitting them down in the comments too, okay? Have a good one, guys.